Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
$25,987 on the Nifty Bank 59,218, 26,180 and 59,650 are the rates respectively on the two indices.
Periodically, you get stocks where risk reward is favorable in different sectors.
Yeah, we have the debt side, but also we have a fairly large amount of cash sitting on our books.
2,300 crore they are going to pay over the next 1 year, and remaining around 3,500 crore that will be paid over next 5 years.
You know, it is positive, although kind of even, Stephen, but still in favor of advances as we speak.
40% on tobacco, cigarettes, not BDs, effective from Feb 1, 2026.
Major catalyst coming in, which was the GST reforms kicking in as well, and that kind of supported not just us but the overall industry as well.
Muted gains for now, quite volatile for the Nifty. Mid caps are outperforming though.
Okay, well, that is the day so far. Markets unable to hold on to gains. I think perhaps that is the common thread across stock sectors, everything. Even a Vodafone Idea, which surged about 10%, is off. And of course, the big accident of the day is what's happening with cigarette stocks. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant and Mangalam with me. Mangalam, hi.
Hi, we opened the batting today, and it's the last few overs of the game so far today, and then we have tomorrow as well. But, the point you made is fairly valid. We are seeing supply, but over the last few trading sessions, every time, the market tries to move higher, the reasons for supplies keep changing. Yeah. So yesterday it was, something else. The previous day it was expiry. The previous day it was something else. And now today it is ITC out of the blue that has come by. So the range that we're on in the Nifty between 26,000, 25,950 to be precise, and on the way up 26,250 thereabouts is continuing to hold on. But before everything else, once again, I think we should wish all our viewers a very, very happy New Year. And we'll tell them what's lined up on the show.
Yeah, for especially those who are waking up now.
Yeah, a lot of them. I'm sure there are a lot of them.
After a nice big party. I mean, wishing all of you a very, very happy and a wonderful 2026 from all of us here at CNBC. Well, let me just quickly run you through what's coming up here over the next 60 minutes or so. So I think it's, in terms of stories, it's pretty clear. It is what's happening with tobacco, right? Markets, of course, are up on your screen. But the FMCG index 3%, all thanks to, of course, that big cut which we're seeing on ITC. Godfrey Phillips is down very, very sharply as well at this point in time. Pharma is the other one which is under a bit of pressure at this stage. So we'll get you a perspective, analysis, everything coming up on that. Automakers, of course, December monthly sales numbers, and we'll tell you who's reported what and what it means for stocks in a bit. On that. Kiri Industries was the big one, right? I mean, the stock's down, I think, about 6-7% now. Okay, it's down 4%, so recovered a little bit from the lows. But some disappointment. Yesterday, the stock ripped 18%, but the management telling us that most of the money is essentially going to be invested into new businesses, so it leaves little for to be distributed as a special one-time dividend or anything of that sort. Okay, so that's the lineup here over the next 60. More December sales numbers coming through. And this is Tata Motors commercial vehicle business, which is reporting numbers 42,000. This is better, much better than what the poll was. The CNBC-TV18 poll showed as far as the number is concerned. This is December monthly sales. Mitesh Thakkar is with us with what he'd want you to do as far as trades are concerned. Mitesh, good afternoon. Good to have you here. So 26,150 or so in the index. Any trades?
I think on the index, we kind of hit the upper end of the range. We got a high of 26,200. And today it's only about an 80-point kind of range. Nothing much on the index. Honestly, I believe that, this contracting movement might extend for the next few days as well, because we still don't have any signs of volatility picking up. But I think the only thing is that in case this time the fall from 26,200 is not very aggressive, then I think the chances of an upside breakout eventually get stronger. For this timing, I have a buy on LNT with a stop at about 4,099, just below 4,100, and a target of 4,210. And Oil India is a buy with a stop at 418.5 for targets of 435.
Right. We take your call on the index this morning itself. You said that it's not yet made up its mind, and that's exactly what's taking place out there. Individual stocks. As we speak, a couple of these broader market names are doing a lot better in today's trading session than what one would expect or what the screen is showing. Atul Auto, for instance, up 11.5%. A lot of volumes backing that stock as well. We usually speak about this just once a month, which is when the auto sales come by. And this time around as well, a 15% jump in their sales. The big play for them is the three-wheeler EV that they've made, and whether they've made inroads into various markets with that or not. Seems like a 15% jump is what the street likes on this stock, up 11.5%. Suntec Realty is another one which is, after a very long time is moving higher. So all of last year was down, 15-16%. Start of the new year, it's up 7.5% straight off the bat. But the big story of the day has been tobacco stocks. Godfrey Phillips, ITC, both of them tank on the news of additional excise duty on tobacco products from Feb 1st. So let's simplify this. Earlier, on September, when the GST 2.0 was announced, it was 28%. Until then, the taxation on tobacco or cigarettes was 28%. Plus, additionally, there was that compensation cess that came by. There was that NCCD, and at the same time, we had the basic excise duty. The street believed that this 28%, as notified by the government, would go up to 40%. And when that would happen, this 28% plus all the other taxes would be subsumed for it to be totally tax neutral. Today, the composition of taxes versus the MRP of a cigarette is around 50 to 53%. This is what was there earlier. However, now the changes suggest that there will now be a 40% GST and the other cesses won't go. In fact, after a 40% GST, there would be new excise duty of 2,100 to 8,500 rupees per thousand sticks, which is basically 2 rupees to about 8.5 rupees per stick. And then there will be the NCCD as well, or the National Calamity Contingent Duty that would come by. So all of this implies that the tax imposition, which was earlier between 50 to 55% of an MRP, would now become 65 to 80% of an MRP or a maximum retail price on a cigarette, which implies that the tax itself would increase by around 20 to 40%. For the companies to actually mitigate this, they would have to take a price hike of between 18 to 35%. And this is something that has earlier never happened. Periodically budgets would come by, there would be an increase. It would at best be around 10%, maybe in the worst case scenario, 15 to 20%. But 18 to 35% is a very wide range and a big one. If the companies do not take this price hike, then the impact on their EBITDA would be a lot more, up to over 40%. And analysts are still doing their multiple calculations. The worst case scenario would be over 40% and at the same time 18 to 35% sort of price hike. If the companies don't take this price hike, there would be an EBIT impact. If they do take this price hike, there will obviously be a volume impact as well. And from what we've looked at in terms of specific increases, the premium players get to see the bigger impact of this. So which is why we're seeing ITC down about 9% because a large part of their revenue and EBIT does come from the premium cigarettes. And for Godfrey Phillips, the largest part actually comes in from Marlboro, which is the premium end of things. So that stock is down around 17%. VST Industries, on the other hand, which is largely a maximum 10-12 rupees per stick sort of player, is not seeing that kind of an impact because there the tax incidence is not as high. So the stock cut is limited to about 1.5%. But this is unprecedented, and the street wants a little more clarity on what the eventual final tax imposition would be. But right now they're pricing in the worst case scenario, and we've seen a cut on ITC, which is as big as what we last saw in the middle of the COVID sell-off,
No, absolutely. And I think very, very large and out of the blue, right, Mangalam?
It was totally out of the blue. In fact, the notification came at a time when most people would have been busy partying and smoking one of these products to ring in the new year. And this morning, a lot of people would have their resolutions to kick that cigarette butt out, and the government has helped them do that.
Slip this in when no one is watching, but I think people are watching now in that sense. But this is bolt out of the blue, and it's a massive knock coming through on a large name like ITC at this point. Devin is with us. Devin, good afternoon. Good to have you with us here. Happy New Year, first up from all of us here at CNBC-TV18, and thank you for being a guide and friend to us all through. So great to see you.
Yes, Prashant. Happy New Year to all of you as well. And always good to be with you, I think, in interacting on the subjects.
Absolutely. This is, of course, I mean, Mangalam was telling us, right? This tobacco thing is is hit hard. Stocks very, very hard. I mean, and these are very large material changes in terms of price increases required. So, I mean, the question is, will price increases damage volumes? Although, you know, one theory goes is that, you know, these are in a way at some level price inelastic products, and you know, it would not. Is there any way to tell what is the volume damage? There will be some damage, I'm assuming, but will it be to the degree that we're seeing today?
Well, I think maybe I think as a non-consumer of this particular product, I don't have much rights to say, for example, on the habits. But I believe that I think those habits, I think, which are hard to change will not get changed. And that's where probably I think the price hike is, of course, a deterrent, but not going to impact beyond a point. As always seen in every previous budget, whenever I think the excise duty tweak has happened, we have always seen this particular impact on the stock price. But frankly, I think still until date, I think even though they have the other contributors in form of FMCG, agribusiness in the portfolio in ITC, still today, I think the cigarette business is contributing somewhere around 78-80% kind of a profit before interest, tax, etc. So in my viewpoint, I think things don't change beyond a point as I see it. But yes, I think in the near term, you definitely see the negative reaction on the stock price, which one is not very surprised given the kind of news.
You know, I don't consume the product myself, Devin, and I don't propagate that product to people as well. Cigarette smoking is injurious to health. But I have 2 or 3 points to make on this. You know, I was just doing a dipstick from a couple of people that we know in our office. The calculation suggests that the 18 rupee cigarette is now going to become 24, 25 rupees. So a lot of people said that they won't have the 18 rupee cigarette and pay 20, 25 rupees for that. Instead, they will downgrade. They will have the 12 rupee cigarette, which will now cost 16 rupees to them. So there will be a product mix change. That is point number one. Secondly, the next 2 quarters for ITC will be incredible. Volume growth. Why is that? Because this is effective Feb 1. So obviously a lot of pre-buying or pre-stocking will take place as and when that happens. So the next 2 quarters are going to be great. And the third part, as far as habits are concerned, people, you know, do not stop smoking, but they will perhaps stop, you know, from the legal ways. There would be the illegal industry. So for one, Godfrey Phillips is also taking a hit because Marlboro, which is extremely popular among the urban areas and, you know, all these premium cigarette smokers, they will perhaps smuggle it from neighboring countries, etc. And that would make it a lot cheaper for people. So there would be a hit on the listed legal players. The contraband would increase as a result of this, is what my limited understanding on this is.
Absolutely, and that's pretty on the ball in that sense. So we'll get you more perspective with more experts through the course of the day, today and tomorrow. I think this is a story worth following as this plays out now. Well, let's talk about auto sales, right? And Sud is here. December numbers. Sud, do we have the entire list now, or still waiting for some? And what are the numbers that we have so far? Tell us.
Few companies are yet to report the numbers, but it's been a good end to 2025. And as expected, most of the companies' reported sales so far have seen a growth in double digits. So I'll start with the passenger vehicle segment. Mahindra Group was the first to report the numbers. So if you talk about the PV segment, it continues to see a healthy growth. In the month of December, also, the growth was 25%, almost in line with our expectations. And it continues to be led by SUV segment that has seen a growth of 23%. If you come to commercial vehicle segment, both one that is less than 2 tons and one that is between 2 to 3.5 tons, both these segments have seen a healthy growth. But the data, if you take a look up to December, for CV that is less than 2 tons has seen a decline. I asked the company, is that a concern? Company is saying that it's not a concern because the demand is now shifting towards higher horsepower or higher capacity CV, commercial vehicle. That's the reason you are seeing a bigger demand for 2.5 to 3.5 ton commercial vehicle. Maruti, as expected, has seen a healthy growth. Total sales have increased by almost 25% versus our expectation of around 17 to 18%. And good part, and if you want to see the impact of GST rate cut, take a look at the entry level, both Alto and Espresso. In the month of December, total sales for these 2 cars have doubled, and it's coming at more than 14,000 units. And if you compare with the data of December of 2024, it was just around 7,500 to 7,600 units. For Maruti also, SUV continues to see a healthy growth. The total sales for SUV segment has come in at more than 36%. Now coming to Tata Motors passenger vehicle, it has seen a double-digit growth. Growth is around 14%, but it's slightly below expectations. But company is saying that Q4 of FY26 and FY26 will be very healthy. Even in the month of December, retail sales were much stronger than wholesales, and because of that, the number of inventory days has come down very sharply. In the two-wheeler segment, one company has just reported number, that is Eicher Motors Royal Enfield sales. It continues to see a healthy growth. Total sales have increased by 30% and it has come in at more than 1 lakh units. But the concern for Eicher Motors is the demand for bike having engine capacity of more than 350cc remains low, while the contribution of that segment is very less. But the bike having the less than 350cc capacity is continues to see a healthy growth. Even in the month of November, it has seen a very good growth and it contributes more than 90% to total sales. So far, whatever companies have reported numbers have seen a very healthy growth.
All right, very healthy growth. Let's hear out what the management of M&M had to tell us on the GST rate cut impact on sales, as Sudarshan is alluding to this healthy growth that came by.
And in September, we had a major catalyst coming in, which was the GST reforms kicking in as well. And that kind of supported not just us, but the overall industry as well. So you put all of these factors together, we've had a strong start till about August, and then supported by GST after that. And so therefore, October, November, December have all been very strong. December, of course, in SUVs, we did about 50,946 vehicles, domestic volumes, which is about 23% growth for us, very strong growth. And even the LCV side, if you look at it, less than 3.5 ton, we did 24,786 vehicles, which is a 34% year-on-year growth. Again, supported by GST as well. So if you ask me thematically, strong portfolio of products, EV launches happening, and then on top of it, the GST reforms, all three have really played out well for us.
All right, so good updates coming in. Devin, you know, the auto sector was definitely the sector of the year in 2025. A big move is what we saw, nearly 30% gains on the auto index. A lot of stocks gaining upwards of 50% as well. Maruti among the second or the third highest nifty gainer in 2025. With the numbers that have come by in December and the triggers that are that lie ahead, do you believe that maybe this momentum continues into 2026, or do you think for now it's done?
So Mangalam, I believe that I think this could be a start of a continued boom. I think as we have experienced recently, I think it could be further continue from coming quarters as well. Largely because of the fact that I think this is the first year in which you have seen the purchasing power in the hands of the consumer. This is going to expand further. Coupled with that, the interest rate is down. So as a result of which, I think the EMI buyers are definitely, I think, in a much better position to bargain for the vehicles which they want to have as far as the choice is concerned. So in my viewpoint, I think be it two-wheeler, be it passenger vehicles, or be it commercial vehicles. Commercial vehicle tractor, of course, is driven by the other story. But the passenger vehicle and two-wheelers certainly, I think, is driven by the money in the hands of consumer. In my viewpoint, I think this could possibly accelerate for a period of time with the kind of, I think, amount of money which is available in the hands of consumers. So we remain distinctly bullish about the prospects going forward. Well, I think this some amount of price is already justified, I guess, I think at this point of time. Many companies are putting at a valuation which are quite healthy, I would say. So, maybe I think some correction in price would be a better choice to buy.
So if you had to incrementally deploy, some money into the auto stocks, how would you distribute them between passenger vehicles, between two-wheelers, and between commercial vehicles? And EV players now as well.
Choice would be commercial vehicle, of course, because I think we see a larger traction, larger demand in commercial vehicles. So certainly, I think they would be the first choice. Two-wheelers with electric two-wheelers, particularly with TVS and Bajaj, I think they remain relatively, I think, better choice. Bajaj, of course, I think the other premium category of motorcycles, I think, which are there in ICE segment, that also is, I think, giving a good amount of clarity for Bajaj to us. The passenger vehicle would definitely, I think, is driven largely by M&M, where the clarity is phenomenally high right now because of, I think, the higher amount of bookings for every successive vehicle that they launch and the kind of orders that they are executing on the top of it. So putting it around 33, 35 times price to earnings. I still feel that I think any correction in the price would be a meaningful buy for M&M kind of a stock in the portfolio.
Got that. There's and you talk about CVs, right? I think you even talked about it. I'm just thinking about Shriram Finance. Shriram Finance, from the day that the first news report that there perhaps is a potential deal brewing, which was about, I think, 3 months back. From that point to the day of that Friday when the deal was announced, the stock ran up about 50%. That's of course also a big gain going into a deal. But I think what's the bigger surprise is that the price is up another 120, 130 rupees since the deal is out.
Yeah.
So it's moved up post the deal announcement after a 50% move. So 1,010. Typically, you see a bit of a pullback, a correction, etc., but not in this one. And it's done phenomenally well, both pre and post the deal coming through. Well, we're going to talk about the RBI's financial stability report now, but not in the context of banks. Ritu, of course, has been telling us what RBI's FSR report is talking about on financials, but insurance has found a place and a strong mention, and especially insurance commissions. So RBI is clearly saying that high insurance commissions, according to them, and they looked at the data, has been one of the impediments to affordability of insurance products and policies. Yash is here with what the RBI report says. Yash, over to you.
Well, Prashant, it started with the insurance regulator flagging risk of higher commission coming in the way of penetration and affordability. Then, of course, it was the finance ministry in the form of the Department of Financial Services Secretary red flagging the issue of high commissions and measures to control commissions. And now it is the Reserve Bank of India which has also spoken and highlighted higher commission as one of the major risks in the insurance sector. Particularly what RBI says is that both private life and non-life insurance commission expenses saw a major uptick. Private life insurance companies, they showed a steep increase when it comes to commission payouts, sharp increase in commission payouts by companies, started especially from FY23. And this is important, right? This is where RBI gives its opinion, saying that higher commission is impacting penetration of insurance with high distribution costs being embedded in pricing. Affordability is getting reduced when it comes to, the insurance products. This becomes very important because, of the bigger goal which IRDAI has, that is insurance for all by 2047. And RBI Finance Ministry coming here and saying that high distribution costs or high commission getting embedded in the price of insurance, that is premium, is coming in the way of exactly that goal, that is insurance penetration and affordability.
All right, interesting one. We had a conversation with, some of the former IRDA, professionals as well, and they did say that there have to be a way to cut those commissions or define them in a way that, there is no bypassing those rules that take place. So it's now the third, after what Yash found out from the IRDAI, then the DFS secretary saying something, and now the RBI itself wanting to speak about that. So
Mangalam, yesterday we put out some data. I don't know if Yash is there. Okay, I think he's stepped off. But basically yesterday we put out data, basically just simple data looking at FY25 over 24, growth in distribution costs and commissions.
Right.
And corresponding to that for the same period, across general life, etc., number of policies sold and premium collected.
Got it.
There is no connection. I mean, one is...
Wow, so commission is up by 24%, number of policies. Wonderful graphic plate pulled up by our director, Shreya. Thank you so much for this. 24% jump in commission, 16% jump in number of policies, 16% jump in premium. So obviously, commissions have grown a lot higher than the return in terms of, increasing the insurance penetration. So there has been more than a required jump, and this is what all the regulators are looking at. Life insurers up around 18%, general insurers up around 20%, all in all up around 24% plus as well. This is Yash's data pulled up right in time by our director. And as a result of which, we are seeing some decline in a lot of stocks, especially the ones that have, made their business around this itself. PB Fintech for one, currently lower by about 0.6%. But Devin, now that, a bunch of regulators are looking at this as a potential place where they can cut insurance commissions further. Do you think players like PB Fintech and their business model seems to be at a bit of a risk from here on?
Well, I think we have to look at it from two sides. On one side, of course, the banks, I think, who are driving higher amount of commission income out of the selling of insurance product, I think they may have a little bit of squeeze in the margin. So we'll have to understand that a little bit in detail. On the other side, I think the insurance companies per se, under the expenses of management, I think would be benefited in my viewpoint. Of course, I think the direction will be, I think, more appropriate once you get the data out on that particular subject. Digital reach to the customer is the way to go, as I see it. So better you are if you are, I think, reaching out to the customer with the fintech platform or investech platform, and I think probably controlling your cost. In such situation, I think one will have to examine variety of, I think, companies which are basically moving in this direction. Not very sure the impact on PB Fintech, at least at this point of time, but yes, certainly the pool of commission comes down, definitely affects, I think, them because they are one of the largest, I think, in the distribution segment.
Got it. Devin, leave it there today. Thank you very much for joining us, and thanks for being with us on the first. Appreciate it. Okay, well, let's just quickly take a quick commercial break here. We'll come back and we continue the conversation on markets. Varun Goyal, Senior Fund Manager of Mirae Asset Mutual Fund, will be with us on the other side. We'll take a look at some of the broader market stocks and what's moving around with volumes. Stay tuned, coming up.
Welcome back. You're watching us here on Closing Bell. While the frontline index is meandering, flitting between red and green, a bunch of stocks are buzzing around, and that's something that you can see the way the mid-cap index is doing as well. Hormaz joins us to tell us about the stocks which are moving around on day one of the new year. Hormaz.
There are a lot of names in the broader markets that are moving around, but can't not talk about the two big names that are making headlines all day long, ITC and Godfrey Phillips. Both of them now, ITC down almost 9%, 9.5% now. Godfrey Phillips is down 17%. While we all know the reasons behind the fall, take a look at the volumes behind the fall as well. ITC has 26 crore shares that have been traded now. The 20-day average is only 62 lakh shares at this time of the day, and at this point of time ITC's volumes are the highest since May of last year, so it's almost an 8-month high is the volumes at which they have been trading today. Godfrey Phillips too has seen over 70 lakh shares that have been traded. The 20-day average is only 2.5 lakh shares, so significantly high volumes with which both of these stocks have declined in today's session. Quality Power is the other name in today's trade, 12% higher. It's the biggest single day gain since its listing. It listed in February of last year. It's gained in 4 out of the 5 sessions previously. Volumes are at the highest level in 6 months. 80 lakh shares have been traded on Quality Power. The 20-day average is less than 3 lakh shares. So here too, the stock moving higher on very significant volumes. The stock's next level on the upside is the 100-day moving average, which is at 861, so still far away from those levels. And it's almost doubled now from its IPO price, which is 425 rupees. Steel Strips Wheels came out with its business update earlier in the day. The stock is up 8.5% in today's session, the third straight day of gains for the stock, the biggest single day gain since June of 23, so over 2.5 years, and volumes are also the highest since July of 23. Over 41 lakh shares have been traded on the stock. The 20-day average is just over a lakh, and the 100-day moving average on the stock on the upside is at 214, and the 200-day moving average is at 221. So important levels on the upside. 2025 turned out to be the second year of negative returns for the stock. And lastly, Panama Petro, another stock that's been holding on to its gains through the day, almost 8% higher now on the stock, the biggest single day gain since February of last year. Volumes are the highest in nearly 2 months. 20 lakh shares have been traded here. The 20-day average is just 25,000 shares, and the stock has moved above its 100-day moving average, and the next one on the upside is its 200 DMA, which is at 330. The stock down around 22% from its 52-week high levels, which is in excess of 400 rupees. And in the month of January itself, over the last 6 years, 5 of those years have seen the stock deliver positive returns in the month of Jan.
All right, Harmas, thanks very much for that. Those are some movers and shakers with volumes as well. Varun Goyal is Senior Fund Manager, Mirai Asset Mutual Fund. Varun, good to have you with us here. Good afternoon. Wishing you a fantastic and a wonderful 2026. Thanks for being with us.
Yeah, good afternoon, Prashant. Thank you so much for having me on the show, and wish you and everybody at CNBC a very happy new year.
Will wishes come true, Varun? That's the question everybody's asking. I just walked out to get some sun in the afternoon, and I met someone who was walking out with an interview with one of our other sister organizations, and he said, well, are people cautiously optimistic or cautiously cautious? So that is how he characterized it. So how would you put it, Varun? What's the mood like, and will the mood, I think we know how the mood is, but will the mood change for the better?
I think it should. Our sense is the cyclical recovery which is underway in India should get only strengthened. I think the cumulative impact of 125 basis points of repo rate cut, GST cuts is only going to be more profoundly felt in the economy this year. And if we keenly look forward to 15th Feb, which should see the launch of India's own foundational AI model. So I think that's the one thing which has been missing in the Indian economy, Indian markets for some time. And hopefully, as we go along, India kind of plays catch up on that theme too. So I think there is a lot to look forward this year. I think we're looking at 13-14% kind of earnings growth for the next 4 quarters. I think the bigger story will play out in small cap, which is underperformed by 16-17% in the last calendar year. And we believe there will be a big earnings delta, which will play out there. So look forward to that.
All right. What other sectors would you be betting on? Because on the one hand, the street is hoping for some sort of recovery in the consumer staples names or the overall consumption sentiment. And on the other, one of the bigger weights in the FMCG index, something like an ITC, has been punched lower by the regulatory updates that have come by. So ITC is down about 10%. A lot of people look at it as a good dividend yield play too. After this news piece that has come by, would you have a view on this and consumption in general?
Yeah, since the demand drivers for discretionary consumption are much stronger post the GST cut, we remain very optimistic on the overall auto space. I think the sales volume is going to pick up even further. I think the SUV segment, the tractor segment, and now I think we are seeing early signs of very strong demand uptake on both LCV and HCV side. So that auto and auto ancillary space definitely looks promising from a consumption perspective. I think white goods, we expect sales to kind of pick up. Hopefully, we should have a good summer, which should do well for the air conditioners and the white goods sales. On the staple side, I think we are much more favorably inclined towards discretionary plays, more on the food side. That's where the volume uptake can be a lot higher. So that remains the preferred consumption stories at this point of time. I think if you look at travel, tourism, hospitality, that again continues to see very strong occupancy trends. The hotels, airline space continues to see very strong demand. And I think that will also be a good play to play the consumption story.
Got that. By the way, 20 points, so not really running away or anything at all. We've been, Varun, talking about insurance as a space and, insurance commissions over the last many days. my colleague in Delhi, Sapna, spoke with the Department of Financial Services Secretary, who on the record essentially said that IRDAI is coming out with draft regulations on insurance commissions. The Financial Stability Report, we just put out information with our reporter, and they're very clearly saying that incentives have to be aligned with regards, commissions paid out have to align with persistency of policies and things like that. There seems to be a focus from the government side to get this done in that sense. Any thoughts and any implications from an investor point of view?
I think, Prashant, financial savings as a space will continue to do well. We have seen that in mutual funds. I think we will see a lot more of that in insurance, that the regulator will be keen to reduce the final cost to the consumer. And therefore, they will keep, kind of rationalizing the incentive structure for different participants in the value chain along the way. But I think that will be done in a way which will make sure that the industry continues to go at a very fast pace. We have seen that on mutual funds. I think insurance also will see its own share of some of those realignments. But I think the overall 5 to 10 year kind of a trajectory for the financial savings as a space continues to be pretty robust. And we remain structurally overweight on asset managers, insurance companies, wealth management companies. I think this as a segment should continue to do well.
Right. Do you have a view on the IT space? Because a lot of people are going contra long on IT, thinking that maybe the worst is behind. Valuations are a lot more supportive. And instead of growth, now they're looking at it as value bets. And if there is a trade resolution, or maybe, the global sentiment improves a little bit, or the AI trade unravels, they think of IT as a potential further beneficiary over and above everything else. Are you in that camp, or do you believe that, the worst is still ahead, or maybe they're going to be laggards from here on as well?
So we are selectively positive on the IT space. I think if you look at the tier 1 IT companies, they're trading at almost a 7-8 year average valuation, some of them even below that. The dividend yield seems to be pretty interesting. So overall, I think tier 1 IT should do well. I think there's still select pockets of overvaluation in the mid-cap IT space. So that's something that I would like to avoid. But I think if you look at some of the more stories, let's say bottom-up stories on healthcare BPOs and some of the other BPO stories, they look pretty interesting, and I think we should see fairly good growth traction in them for the next 2 to 3 years.
Varun, we leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV18. Well, I think we'll take another quick commercial break here, some trading ideas with our technical analysts on the other side, and more coverage as far as markets go. Stay tuned, coming up.
Welcome back. More of the same on the market, but a couple of stocks doing well. We have HUL, which has spiked to the high point of trade. This even as ITC is currently at the low point. We've seen some further traction build in Shriram Finance as well. Prashant pointed this stock out at the start of the show, but from those levels itself, it's seen a bit of a further uptick. So Shriram Finance has moved higher to the highest point today and perhaps a life high on that stock as well. Kotak Mahindra is the other one, which is doing well. Alongside that, we have Apollo Hospitals, which has moved higher too. From the broader markets, Vodafone Idea continues to move higher, though it's off the morning highs. Bharat Dynamics is the one which has seen a bit of a spike, a sudden spike in just the last 5 minutes or so. There's been a bit of a vertical up move on Bharat Dynamics. That's the one that should come up for you, the intraday. And they'll tell you that at lower levels there was purchase and it's moved back into the green, up around 1%. Mitesh Thakkar back with us. Mitesh, what is the tomorrow trade?
We had earlier advised Petronet, I think, and I'll repeat that again. I think today, another BTS today for Petronet. A very good charts developing over here. Slowly, the stock is getting stronger. So BTST with a stop at about 285 or just below 286, 280, 580 or something like that. And look for a target of around 294 to about 295. And the other one which I like, that's PNB Housing. That's a VTST with a stop at 979.5 for targets of 1,000 plus.
Got that. Thanks very much for that, Mitesh. So those are some trading ideas. I think Amrish Baliga is with us on the program now. Amrish, great to see you on the 1st of 2026. Happy New Year.
Thanks, Prashant, and wishing all of you at CNBC-TV18 a very happy New Year and a healthy New Year too, and also to all your viewers.
Well, absolutely, and the same to you, Amrish. Let's straight away kick in with your first pick for 2026. If I can put it that way. Atul Limited, Amrish, right?
Yeah. In fact, Atul is an integrated and diversified chemical company manufacturing around 900 products across chemistries. And customer segments are across crop protection, pharma, polymers, aromatic, dyes, and textile chemicals. No new players, in fact, are entering these major segments globally. So competition too is reducing sequentially. Strong growth has been witnessed in the last 15 years. Revenue CAGR has been 10%. EBITDA and PAT have grown 10x, and margins have doubled to about 17%. In the last 3 to 4 years, they've executed a lot of capex. So the benefits of that capex will now start flowing in. Management also has indicated a top line of about 8,000 crores by FY28, which is against about 5,600 crores in FY25. So Q2 earnings were in line, expecting Q3 earnings to be better than what we saw in Q2. And the stock also has consolidated decently well in the last couple of months. So I think it's just right for a takeoff from here. Expecting the FY27 EPS to about 260. So my target price is 7,800.
7,800?
7,800, yes.
7,800. Okay, got that. There's this stock called Entero Health, which is listed in early 2024. And I think I'm just only mentioning this because I think let's just pull the price up 9.5% on it, and we of course saw actually flat start and moved up starting about 12:30 or so. So we had S. Narain from ICICI Prudential AMC in the morning with us. And, ICICI Pru bought a large quantity in a bulk deal recently. Just a couple of days back. Price was around less than 1,000 rupees or so. And I asked Narain if, Entero and what they've done in terms of picking out, and stocks done poorly from the highs, etc., from its listing actually, if this is the kind of style they would adopt, which is businesses you understand, well covered, and where there's been significant price damage, and be opportunistic. And he said, well, that's perfectly the kind of activity they'd like to do. I'm not sure who's the buyer today, but you've got a very, very large move developing on Entero Healthcare once again. Amrish, I don't know if you have any views on this one. And as I said, 2 years old now in the markets.
In fact, I've not tracked this stock, so it's a bit difficult for me to really comment on that.
Okay, got it. Let's come back with more questions for you, Amrish. F&O and how's that market sort of moving? Mangalam has walked across to the F&O desk. Mangalam, take it away.
Well, there are a couple of things that are moving the market right now. The Nifty and the Nifty Bank are not moving too much. They're just filtering between red and green. The good part is that they haven't broken below important supports and they haven't broken above important resistances as well. I guess they're waiting for the markets and volumes to return on full steam before, there is a decisive move on either side. The broader markets, that's where interesting action, because the mid-cap index is outperforming the frontline index by gaining about 0.5%, but not so much beneath the surface. The small-cap index is absolutely flat, mildly in the red, if you may. And the advanced decline as well has been fairly indecisive. Yes, the green line is above the red one, but they've been coming fairly close to each other at points, even intersecting. And now as we speak, we have about 1,600 stocks in the green for about 1,300, 1,400 stocks, which are in the red right now. The Nifty has been pulled lower by ITC. If you look at the contribution chart, had it not been for ITC, you would have seen a near triple-digit move on the frontline index. The ITC taking single-handedly the Nifty down by about 95 points. And that's where it gets interesting, because at lower levels, there is support. At higher levels, there is congestion. 26,200 call writers, still fairly active, premium of 60 rupees, telling you upwards of 26,250, there would be supply. But at lower levels, the put writing has increased. From 26,000, it's gone all the way up to 26,100. And now, as we speak, it's 26,150, premium of 72 rupees, telling you that, the support for the market has moved higher from sub 26,000 levels to sub 26,100 levels, closer to 26,050, 26,060 is where the support is visible. On ITC, interestingly, this morning we had the 370 put, which had the maximum open interest. Now, those put writers have felt jittery. The stocks fell further lower at the lowest point of trade today. And now it's the 360 put, which is still active. So it's telling you that after this big gash of nearly 10% on the stock, we've, come closer to important support levels for ITC. It's below the 200-day moving average, but very close to supports, going by the options data of around 355 to 360. So that's a level that I will monitor very closely on ITC. And given ITC's decline, we've seen some punt shorting on a couple of other sin names as well. So United Spirits were one, down about 3%. But on the other hand, we've seen a lot of long positions added on Indus Towers. Maybe the recovery in Vodafone is what the street is betting on through a punt on Indus Towers on the long side.
Thanks very much for that. So that's overall market positioning and, of course, what's happening with individual names as well. Well, I think the other name, which Amrish, I want to come to you with, of course, is Kiri Industries. But before that, we got clarity from the management on how much net of tax, expenses, etc., the company is getting after their stake sale in Dystar and what they plan to do with it. Let's capture the essence of what the management told us. Sonal is here with details. Sonal, take it away.
Thank you so much for that. Well, the stock surged 20% yesterday after the news came out that Kiri Industries will be getting finally 6,200 crore rupees for their 37.5% stake in Dystar. It's been a long pending battle, started back in 2010 when they acquired Dystar. Dystar went bankrupt, and since then they've been asking for the share or the value that they have in Dystar from Singapore High Court. And back in 2023 and 2025, the Singapore High Court did say that yes, the valuation should be higher, and it was set at around $690 million. The company, we spoke to them today, and they said that net of taxes and net of all the legal expenses that the company will have to incur, they'll get around 5,200 crore rupees. The total consideration is, of course, 6,200 crore rupees. So net of all the expenses, the company will get 5,200 crore rupees. However, the stock came off from the highs after we spoke to the management, because he indicated that more than 90% of this consideration will go into capex, into import substitution projects and other projects that the company had spoken about earlier, and not so much to the minority shareholders. This was a disappointment because the indication or the expectation from the market was that a lot will go to the shareholders. So since then, the stock has come up from the highs of the day. Although they did indicate that, yes, this is just their thought process right now. This has not been taken to the board, and there will be more clarity which will emerge after board approves any of this capex as well. But now, on the initial commentary that came in from the chairman and CMD, that more than 90% will not go to the shareholders, there's been some disappointment. But of course, we'll be tracking the developments on this one very closely.
That would be more than 5,200 crore that will come to the company, inclusive of taxes, expenses, everything that relates to that. See, the majority, I would say, based on the earlier discussion, more than 90% would be deployed into futuristic growth projects in India. How much would be the precise number for the dividend? That would depend on the board to decide, but large chunk of money would be invested for the future growth. So there are sectors which are related and unrelated diversification both. So we decided to put some funds into fertilizer, which is again the need for the country, replacement of our imports, also the metal sector in which we'll be investing into copper, which has already been announced earlier. And that would also be replacing the entirely the import into the country. So we'll be investing into import replacement sectors, but not in the line of dyes and intermediate range of specialty chemicals where we are today. So it would be related as well as unrelated diversification both. These are the intentions which I have shared with you, but with the final decision of the board, this may change as well.
Yeah, that last point is important. This is what they want to do, what Mr. Kiri would like to do, but he's got to take it to the board. Maybe there is a shareholder. I asked him specifically whether a shareholder approval will be required or not. He said, well, maybe it's for some of it, they may be required. So hopefully shareholders perhaps get a say in this as well. Amrish, it's just the old story which has now finally come to a close with this money coming in, but I guess not a close because now, of course, what do they do with the money is the question. You heard the management. What do you make of it, and how would you read it?
Quite disappointing, I would say. Because despite getting about more than 5,200 crores net of taxes in hand, a company with a market cap of closer to about 4,000 crores does not believe in distributing at least a part of that. I'm not saying you should be distributing the full thing, at least a part of that. Maybe 2,000 crores can be distributed. Because see, you look at the fixed assets of the company, it is less than 1,000 crores. And you're talking today of putting a capex of 5,000 crores plus going ahead. And that too in an unrelated business. It's not in the same business which is confirmed. So I think that's a high risk game. And when you're going to be playing a high-risk game, I think it's time one should be at least sharing something with the shareholders who have stayed with you. And the other issue, I think, is going through with the resolutions, because I think the promoter holding is decently low. I don't know how they'll manage that.
We take that point, but they say that they've had a word with a lot of those shareholders themselves, and he was saying that it was the shareholders which suggested that you deploy this capital into more futuristic businesses for which the company has an internal payback period of around 3 to 4 years as well. We'll monitor this situation as it develops, and perhaps post board meeting, what the board says would be extremely crucial to track whether the amount that they will distribute increases from this sub 10% mark or not as well. But the stock currently down about 6%, but from the highs down about 10% after the management commentary on CNBC-TV18. But let's slip into a short break, and as we do that, let's hear out what S. Naren of ICICI Pru AMC told us on his outlook for the market in 2026.
Yeah, actually, this is a mature bull market. This is not a initial part of the bull market. You've seen all sectors do well. You've seen all the stocks do well. And US has also got a mature bull market. So, therefore, we are in that stage, where we have to do stock picking. There's nothing at this point of time which looks dirt cheap at this point of time that you can make big money at this point of time. We are no longer saying that small cap is a no-no or something like that. We have to look at all capitalizations, micro cap, mid cap, small cap, everything, and look for ideas where stocks have corrected meaningfully. And you feel that we can make money. We have to do work on those companies also. It's not that you can buy anything and everything just because it has fallen. We have to do the work also. And that's what my colleagues are engaged in across sectors. I think we are giving good valuations to public market in the market. There are very few markets in the world where the IPO market is as active as India. And there is a responsibility on all of us to actually carefully invest in IPO stocks, frankly, And if we make that mistake, if we make mistakes, we'll come to know later. But I would say that equity supply will continue. I don't see an end. Yes, January seems light comparatively. But if I take a year, I think there will be many IPOs which will come, and that will continue and keep a lid on the market. How much we know about US AI, whether it is a bubble, whether it is extremely overvalued. We keep talking it is extremely overvalued, but if someone goes and questions us beyond a point, we'll tell them that we don't know as much as you. That is the reality. And but to us, it looks like purely from a framework of extreme performance, we think that US AI stocks look overvalued, but that is what we have. And but that is an area where we are a bit worried. But what happens there, we'll have to see. But in our framework, certainly we are worried about that. And we are worried about ripple impact on India also. But we think India is an outperformer in that fall. Definitely, I think earnings will be better than what we have seen. I think the government has done a very good job in 2025 by cutting interest rates, cutting GST, and cutting income tax. I think there is going to be a much better earnings situation in 2026.
Welcome back. 3.5 minutes to close the first trading session of 2026. We do have a bunch of stocks which are doing well. Suntec Realty, when we started the show, was up around 7%. Now that's extended its gain to about 10%. Ajanta Pharma is up 6% as well as we speak. And decent traction on Atul Auto post their numbers. Amrish Palika still with us. Amrish, you spoke to us about Atul Limited as your pick, but do you have a view on Atul Auto, which again is gaining after its first, the monthly numbers?
Atul Auto, I don't track it very closely, so it's a bit difficult for me to really comment on that.
All right, I think his frame has... Okay.
I think Amrish is back.
Right, Amrish, go ahead.
In fact, I don't track Atul Auto very closely.
You have to unmute yourself, Amrish. I think it's gone to mute.
No, it's fine. It's
okay.
Yeah, go ahead.
Go on.
In fact, I don't track Atul Auto very closely, so it's a bit difficult for me to really comment on that.
Suntec Realty?
See, Suntec Realty, as well as the overall the real estate space, we didn't see much of a performance in 2025. But clearly, I think 2026 we should again see demand coming back, both as far as the mid-premium segment is concerned, as well as the affordable housing. So, I mean, here I would surely recommend stocks like Godrej Properties in the higher end, and possibly something like Arihant Superstructures, which is in the mid and affordable level. I think that's one stock which is decently well because they are basically in Navi Mumbai, and that's the area which is growing majorly post airport inauguration.
All right, we have to take note of Shriram Finance once again because, you know,
it's up more.
It's up more. It's up more. 3% now as we speak. Look at that. It's just, you know, one of those things that are, it's just one-way street out there. Amrish, just a final word. Godfrey Phillips, do you track?
No, I track ITC very closely.
Oh, go ahead. Tell us about ITC then.
Yeah, and I think, I mean, whatever news has come out is extremely negative, at least to start off with, and because of which we have seen this major cut in the stock price. But then if you look at it historically, whenever such news has come, and normally such news has come during the budget time, if you are going back to the last 10, 20 years, and whenever people have bought on that crack, have made money in the longer term. So I would say utilize this opportunity because cigarette smokers, irrespective, will continue smoking, whatever the price is. So I suppose this is a decent opportunity to buy at lower levels.
All right. Take that point, Amrish. Thank you so much for joining in.
They don't call it habit forming for nothing.
I guess it. But, you know, well, I don't want to comment on the habit bit, but we'll thank Amrish and start wrapping because less than a minute to go for close. Absolutely flat close. The first day of 2025. The Nifty just about 6 points to show in terms of gains. The overall range of the market was about 100 points as well on either side, the high minus low. The Nifty bank as well. The sensex, marginally lower as compared to the Nifty. The Nifty was buoyed lower by ITC, but supported by a couple of these IT names. Bajaj Auto did well. Shriram Finance continued to do well. IndusInd Bank up 3%. Eternal was up 2%. The broader markets actually had it a lot better, up around 0.5% for that index, with the advances outnumbering the declines by a smidge. 1600 green for about 1350 in the red.
Absolutely, and maybe just a bunch of names which and how they ended today. So Idea, of course, and they're at the bottom of the screen. Some of them: Idea, Quality Power, there's Transformers and Rectifiers. Cross, that is KROSS. There's Piccadilly. Suntech, we just spoke about, Ajanta Pharma, Atul Auto, many of these names. I mean, Avanti Feed, Intero is something we discussed earlier, Vector Foods, CSB Bank, and so on and so forth. So enough and more volume-led gains today. I reckon overall volume should be lower compared to the average, and we perhaps will have some of those stats. We'll be able to put some of those stats out a little later. At first glance, it seemed pretty okay. On the downside, though, not very much. With stuff which went down with volumes, Deepak Fertilizer, Ixigo, KPR Mills, etc. A few which kind of stand out in that regard. So that's the market for you. 10 points, 26,140, ringing in the new year 2026. I guess it's a wrap on this edition of a Closing Bell. And from Mangalam, me, everyone on the team, it's goodbye. Thanks for watching, but stay tuned. Markets forward will pick up on the action in just a bit.